Hi everyone, my name's Darryl Panes, CEO of As Good as Gold Australia, and this morning once again I'm joined by my brother Brian.
Thank you, Darryl.
Partner at As Good as Gold. And today we have the absolute privilege of interviewing the one and only, and I repeat that, the one and only Lynette Zang at LynetteZang.com. Good morning, Lynette.
Good morning, Lynette.
I am so happy to be here. I've really missed you guys since I was out there last August.
Yeah, we had a great time. Lynette joined us at a number of events and as the keynote speaker, of course, and it was just a phenomenal success. And so it's all going to happen again, of course, in November.
Yes, later this year.
So we're going to make a mark on the industry, in particular in Australia, and no one's ever done anything like this before.
Not in this country.
Not in this country. Where we've got, incredible speakers, the best in the world on the subject of precious metals, of course, and the economy. And Lynette will be one of those keynote speakers, and we'll have Alasdair Macleod coming across, of course, and Bill Holter have already confirmed their space. So it's just going to be a phenomenal year. Lots to look forward to towards the end of it, November. And prior to that, of course, we're going to have Tucker Carlson as a speaker. We're going to be touring with Tucker as the major sponsor. And that's just going to be absolutely huge.
Yes, that will be.
Tucker's been up to a fair bit of late, hasn't he?
There's a young gentleman called Putin, President
Vladimir Putin.
I was trying to think of his first name, Vladimir. Not a common name, over here anyway.
Not in Australia.
No. But yes, it's we've been able to sponsor Tucker Carlson doing that. Having audiences in the capital cities over around Australia, and we'll be touring with him. So yes, excellent stuff.
5-state tour, so that'll be in July.
Yeah,
early July. So all good. There's lots of people talking very highly about gold this year, where it's going. It seems to be consistently the year for gold. So let's talk about that a little bit. Because last year, 2023, I want to start with this. The world demand for gold was 4,899 tonne. But the total output of the world, the mines throughout the world, is only around 3,200 tonne. So I'm at a bit of a loss as to where this extra gold came from, the extra tonnage. So I'm hoping Lynette might be able to shed a little bit of light on this subject. And not only that, but why, with the demand as high as it was, did gold not reach any higher than that 2,050 US mark? If you could cover those 2 points, Lynette, I'd really appreciate it.
Well, I'll do my best. But whenever you see gold trading at these kinds of visible highs, it still doesn't reflect its true value, but it does get more eyes. And so if somebody's been sitting with, gold, it'll bring that back onto the market. But additionally, how easy is it to use gold contracts instead of gold if you are a trader? And that also speaks to the next part of the question is, why hasn't it gone up? Because in the physical market, there's a finite amount, but in the paper or the digital market, there's an infinite amount.
Yeah.
And as we know, a rising gold price is an indication of a failing currency. And, if you look at what the global central bankers have been doing, again, they're buying more physical gold than they ever have historically, because I always go back to this currency's life cycle and the fact that the debt-based system really died in 2008. They just had to, we could have a little contest here, right? But they just had to print out, as much paper as they could to make it appear that everything is hunky-dory, push the stock markets to new highs, speculation and all kinds of things to new highs. But that's really the answer, right? With physical gold, there's a finite amount. With digital gold, there's an unlimited amount, and it's cheap and it's easy and it's fast to create. And it's really all about perception management. All these global central banks are buying more gold than they ever have historically, but they don't want the public to do that. Well, why are they doing it? Because they know they're destroying the rest of the purchasing power in the currencies, and they want to remain in control and in power.
Yeah.
Exactly the same reason why individuals, need to be buying gold and silver so that they can retain their freedoms and their power and their choices.
Yeah.
We have
been confirming that for a very long time, haven't we? Yeah. I mean, there's nothing like owning physical gold. Thank heaven we were educated a long time ago on that. Look, there's a lot of people talking up gold at the moment, more so than I think I've heard for a very long time. 2024 going to be a huge year. I want to refer to a couple of remarks that typically Alasdair Macleod made, and then Graddhy Trading. So I want to get back to Alasdair first. So just recently he confirmed the Chinese stock market and, of course, the property markets are in trouble. Well, we're very much aware of that. But interestingly enough, the Chinese public are buying gold right now at close to all, the buying power is close to all record highs. In December of 2023, not only a few months ago, the withdrawals from the Shanghai Gold Exchange were 271 tonne. So that's the second highest monthly withdrawal on record. So the highest was 285.5 tonnes in July 2015. Interesting thing about that was that, of course, the US dollar was, in gold and US dollars, $1,050. It was at an all-time low, and that's when the buying power came in. Now, I see it very similar now. Right now, if we can relate this, that's doubled. The price of gold doubled since then. $1,050 is now sitting in 2,000 or thereabouts. So could we be seeing a repeat of that right now? Buying at a low, seeing it double. Can we see an emulation of that? And then Graddhy Trading, a notable and very respected commodities trader out of Sweden, said this, that their charts are confirming since 2020, gold has had 6 attempts to break out above its resistance line. And we know the more times a resistance gets tested, the more likely it will break. So gold has really consolidated and is forming a huge and perfect bullish breakout. Graddhy is suggesting that the gold is on the brink of exploding. I'd like to know your thoughts on this. I think it's time. I really do. And these guys are much smarter than I am, and they're saying exactly the same thing.
Hang on, I'm pretty good.
So,
we always have to remember that gold is good money, right? This other stuff, this is just garbage. This is just debt money. And when you're looking at what's happening, here, yes, technically gold continues to go up, hit that top. But again, a rising gold price is an indication of a failing currency. They can create as much digital gold as they want so they can push it down. But they're losing that steam. And I'm going to see if this works. Can you see the spring?
Yeah, we certainly can.
Once it breaks, then I don't know that worked great. I have to find a better spring. But when it breaks that resistance level at the top, then yes, it shoots in a direction. And in reality, it has a couple of times for a moment broken that top. So to see it go up in the contract, even if it doubled, even if it tripled, even if it quadrupled, it would still not be reflective of its true fundamental value. The place that you find that is in the physical only market. That's where you find that. Now, I'm not sure about, you're going to know this better than me, if there's been a noticeable change in the premiums because of that greater demand. Because in the physical markets, that is a true supply and demand market. Where I see it quite easily is in the collectible physical market, because that is less influenced. Actually, it's not influenced at all too much. I mean, some of the lower qualities are, but primarily that is not as influenced by the spot market as, say, just like a raw coin or bullion is. So could we see it double this year? Sure. But would that still be a bargain? Absolutely. That will still be a bargain. And it's going to be interesting to see what is done by November in the spot market. You just have to, I mean, look at what's happening in Zimbabwe, right? They brought out the gold-backed CBDC, but you can't convert it into the physical metal. A year earlier, they brought out the 1 ounce Zimbabwe gold coin for those people that actually could afford it to protect the last bit of destruction that they're doing in their currency. But the public, the general public, has still lost all confidence in the currency that's plummeted, 87% in the last year. And that's against this stuff, the greenback, that is dealing with inflation. So that's losing value too. I mean, the reality is that physical gold and physical silver in any form, I don't care what the form is, as long as it is physical, is monetary at its base and is used in every single sector in the global economy, period, end of discussion. And therefore, it has the broadest base of buyer. That's why it's never, ever, 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 ever gone to zero, because there's always buyers. And when you add on the fact that they have never been able to duplicate the properties of gold and silver in a lab. I mean, they can create diamonds in a lab and any of the gemstones that you want in a lab, but they have never been able to capture the qualities of gold and silver in the lab. It still needs to be used, whether you're going to outer space or going to the moon or anywhere else in the system. Does that make sense?
Yep.
Makes plenty of sense. I did know for a while, I'm not quite sure if it's still now, but as Darryl mentioned, China, the premium over the spot was about $110 last year towards the end of. So, the Chinese recognised that the spot price was not the real price, and they were paying over $100 to get it.
Yep.
Yeah.
Yep.
And I think what's interesting that you said about the withdrawal from the Shanghai Gold Exchange is because smart people understand, right? Like you and I, we understand that if you don't hold it, you don't own it. So having these contracts and then being able to convert them into the physical metal, I really only care. I only will believe something that can be converted. Because, back in the beginning of this, as a U.S. citizen, this is a $20 gold coin. If I didn't like what my government did, I could walk into any bank with this and walk out with this, right? Or I could walk into any bank with this and, more importantly, walk out with this. Then that created restrictions around what the government can do. Once you couldn't do that, the citizens lost all their power.
Yeah, 100%.
Yeah, I was speaking to Graham Daniels the other day, and Graham, of course, the son of Peter Daniels, our lifetime mentor, and said, so what do you think gold's going to do? I asked him the same question. What do you think gold's going to do this year? He said, gold, Darryl, will do what it's always done. Gold will emphasise the absolute mismanagement of fiat currency. It's been doing that for 5,000 years. and it will continue to do so now, probably at a more alarming rate than we've been used to. But that was his expectation, and I think just falls in line perfectly with what Lynette's just said.
Here's the other thing that to me is like so critically important that people understand. You know, we talk about inflation. So, okay, the CPI data in the US or anywhere else is running hotter. Inflation is stickier. Well, yes, it is. But therefore, the central banks can't lower their interest rates. And so they'll use that as an excuse to push down the visible price, the paper price of gold, right?
Yeah.
When the reality is, I mean, that's just a trading excuse. It doesn't really even make any sense, because when I look at the monetary velocity, so how quickly this stuff changes hands, right? What I'm seeing has me extremely alarmed, because that monetary velocity is spiking in a pervasive way. So I look, maybe I'm wrong. Maybe I don't know anything. But the reality is I do believe without a doubt in my mind that the hyperinflation that we've been talking about has already begun. And that, yeah, this inflation will prove stickier. Yeah, like flypaper sticky, you're not getting rid of it, period, end of discussion. And so people need to have the physical metals in their possession, because when that happens, it's like slow, then boom, fast.
Brings me to the point too, Alasdair Macleod mentions this a number of times, that gold is not supposed to go up with interest rates, because if interest rates are high, gold goes down. But you have a look at the 70s, and the interest rates in the US went to about 18%, and gold went from $100 to $800 an ounce, in a period from 1976 to 1980. So I think we can look forward to some similar reaction. Yeah.
Let's talk about that period for just a second. And I mean, I'm sorry if I'm taking you off of the questions, but I think, you have to understand that people in the US could not hold more than 5 ounces of gold during that period of time. But interestingly enough, I believe it was either 1964 or 1965, suddenly and miraculously, and why? You could hold gold contracts again. Now, the general public was not aware that you could do this. So the general public did not participate in this. But the guys that are making the rules and the laws and all of these products, they knew that things were going to change. And so even though in the 60s and in the very early 70s, you couldn't convert it into the physical metal, those that were in power, that write the laws, that actually understood what was going on, they accumulated these gold contracts that they could buy very cheaply, maybe based on $100 an ounce, or maybe even based on $35 an ounce, which was the official gold price back then, right?
Yep.
And to your point, then gold went up to $825 intraday pretty quickly once they started to untether gold from its tether. And I mean, don't you think that's interesting? I mean, I just find it kind of like, why did you suddenly have these gold contracts when they were illegal for so long? And hey, that was the 60s. So it was illegal, but all of a sudden there are these gold contracts again.
Man. Yeah.
Yes, the financial people have wondrous ways of being able to have things under control until they can't have it under control. And that's when the people start to recognize that confidence in the money system is lacking very badly. Darryl, did you?
Yeah. I do want to, all the comments here are extremely valid. I'm really interested to know what Lynette thinks about silver, where silver's heading. And I want to finish with that, because it's 90-to-1 ratio to gold at the moment. It's ridiculous. But the crazy thing about this is, and what we've got to look at this historically as well. Since 1971, it's gone out over 80-to-1 on 6 occasions. The interesting thing about all of this is that on every single one of those occasions, and I'm a great avid supporter of history, right? I learn a lot from it. On every single one of those occasions, it's closed in to around 40 to 1. So it's going to do it the 7th time. No question at all about that. Graddhy has this to say. Despite extreme pessimism, silver is coiling up for an upside explosion like never before. As Graddhy states, confirming from the charts, this is the mother of all very probable cup and handles. The bigger the base, the bigger in space. This is where it's going to the moon. Right. So I'd like your thoughts on that, Lynette, if you could, please.
Well, I looked at the spot price of silver shortly before I came in for this interview, and it was in US $22 and change. I mean, that's laughable.
Yeah.
That's laughable. The premiums on silver is ridiculous because where gold is recoverable, silver is not recoverable. So we're using up the limited supply of silver that we have here. So I would agree 100% that the cup formation, that base, that accumulation that it's building is the mother of all. But where I always kind of veer, because if you're thinking of it in terms of dollars, let's say it goes back to 40 to 1, or even goes to 20 to 1, or whatever it might go to. When that does indeed happen, I think there's going to be a greater awareness, and you're not going to want to convert it into this garbage that buys you absolutely nothing. And, that's where I think that a lot of people kind of misunderstand what's really happening in here, because it's not gold or silver going up in terms of this. If you convert it into this, it's not stocks and bonds or anything else that you can only convert into this. And that's the difference between, say, stocks and bonds and, say, gold and silver, right? If what you're holding, you can only convert into government money, and the government money, like in Zimbabwe, nobody wants it. They don't trust it. It doesn't matter what happens with the ratios or the spot price or any of that. With gold and silver, since they're money without anybody dictating that they're money, and there's lots of historic precedents, but again, going back to its usage, what's more important to me is how I'm going to be able to physically use these myself as a tool of barter when we enter that hyperinflationary depression. Because at that point, nobody wants this. They want this.
I wanted it before that. This is from a bit from a Yahoo Finance titled this article. Jamie Dimon says Washington faces a global market rebellion over record US debt. He went on to say, "It is a cliff. We are going at 60 miles per hour towards it." Now, he also said, the global economy, not the US economy, the global economy is approaching the point of no return, courtesy of mounting government debt, and it would lead to a massive fallout of markets and federal institutions. Lynette, what is your understanding of what the CEO of the biggest bank in the United States or in the world, what is he actually saying? Because I know he said 6 months ago we are getting close to a hurricane. What's your thoughts?
So my thoughts are that, everything does feel like it is speeding up. And the IMF, I haven't even had a chance to read it yet, but they just came out with a report on how opaque sovereign debt markets are. So yes, we are absolutely, I wouldn't say 60 miles an hour. I'd say 560 miles an hour.
Yeah.
Headed over that cliff And that definitely, I mean, that's what they're doing. They're rushing to get a new system in place when that happens, because it's like a hot potato, right? And the debt issue, it's with governments, it's with corporations, and it's with individuals. And I think we've already started to go over that cliff. They're just like pumping the air back into it as much as they can so that we don't realize it. But I would take it a step further than Jamie Dimon, but it's how you get into a new system. When this debt bubble, which has already been popped with all these high interest rates, and what are they going to do? They're going to turn around and pivot and lower interest rates again. I mean, hyperinflation. That's what Jamie's really saying without really saying that. What happens when the very foundation of what creates this credit, debt, what happens when you can't do any more credit or debt? If that's what the entire global system is based on. And as far as the treasury market goes, I mean, I almost don't even know what to say about that. We've been experiencing the lack of liquidity in those markets since 2015, and it's simply speeding up. And that, and liquidity, for those that aren't familiar with that term, is the ability to easily buy and sell without a great price dislocation, the foundation of the global markets, which is really going like this. So if you're in your house and your foundation is shifting like that, are you going to stay in your house or are you going to get out?
Very true. I love your point about 560 mile an hour, because I'm sure when Jamie Dimon talked about a hurricane, he got wrapped over the knuckles with that one. And so he used 60 mile an hour instead of 560. Otherwise, he might be taken out of office. So, very interesting point, 560 mile an hour.
Yeah, and my bet would be Jamie Dimon owns a lot of gold.
Yeah.
I'd just say you are right.
I know he recently sold many millions of his shares. Yeah, I wonder what he did with it. Yeah.
Bezos just sold $2 billion worth of his Amazon stock. Huh. Yeah. Isn't that interesting? I wonder what he did with that.
Yeah.
I mean, after all, you're only insured up to, in this country, $250,000.
I must admit, I do have a bit of a laugh on the subject of economics and what we've been just talking about, because one of the article that I read only a few days ago said the US must get the economy moving, and we must go have productivity, get the people moving, spending money, and creating more things and whatever. And that's okay if you're under a gold standard, but when you're under a fiat currency standard, the economy is based on printing of money. You can't have a growing economy without printing more money. And what I learnt from Mike Maloney many, many years ago is that every dollar printed has got an interest rate attached to it. And so you have to print more money to pay the interest of every currency that comes into formation, every dollar that comes out. So you never get rid of the debt. Never.
Exactly. And that's why you can look at all these charts and you don't see the debt going like this. You see it just going like that.
Exactly.
And frankly, that is true, again, for governments, corporations, and not as much with individuals. We did see a lot of pay down in debt when they were stimulated during 2020. But it's not only is it way back up, but it's hit over 1.1 trillion in credit card debt at what, 20? I don't know how high those interest rates are. I think they're 26,
a lot.
Something like that.
Yeah.
Yeah. So you need to take on more debt in order to pay the debt you already have, and you're compounding interest.
Yes. Yeah.
That's not a good recipe.
It's a nightmare. That's okay, I have one last question before I finish. Now, as most people know me, I give a lot of facts out and then I ask the question. So just bear with me with a little bit of a story here. But it's all about, I want to talk about being wealthy and to maintain a good retirement income. Now, I go back to 1975 when IBM in the United States was at the top of the markets with the market cap of $30.96 billion. After that, in the top 20, you've got past the top 20 and you got a company typical Kellogg's. Now, it had a market cap of $1.5 billion, a lot smaller than IBM, $1.5 billion as against 30. But the majority of market caps for all the companies was less than $1 billion. So maybe you can see where I'm going to come from here. Now, let's have a look at this. A few years ago, 2017, so it's only 7 years ago, Apple's market cap was $762 billion. Today, 7 years later, $3,007 billion. Now, that's $3 trillion, right? Now, let's look at the national debt. Back in 75, $551 billion. 2024, $34,000 billion. Where's all this going? I'll tell you. 7 years ago, there was no trillion-dollar market caps, and now there are 4. The way I see it, those 4 companies got to the position by having newly printed money thrown at them, and not because they were entrepreneurial. I think in a few years, the money printing will collapse, and a gold standard will be forced upon governments, but with a good ending for those who own gold and silver. I'll give you an example. When Henry Ford produced that Model T in 1908, he produced it for $360, but that was equivalent at $20 an ounce gold. That's equivalent to 18 ounces of gold for the Model T. Now, he was producing 100,000 units to get it down from $870 to $360, but 18 ounces of gold. Remember, 18 ounces of gold. Now, buying a Ford today, 2024, is around about 18 ounces to 20 ounces, right? $2,000 an ounce times 20 is 40,000, right? So it's still 18 ounces to 20 ounces. That's not bad going after 110 years of all the inflation and all the money printing, but gold still the same price. But the gold price is manipulated. So buying a Ford model today under a gold standard would be between 3 to 4 ounces of gold. Not 18, 3 to 4 ounces. That is a decrease, folks, a decrease. Your money is going to go a lot further if your money is in gold and silver. Now, how did I get to 3 to 4 ounces of gold? The production line of any motor car company or plant, averaging 100,000 units per year, right, which is Model T, that brought that car down to around about 91 hours to produce, right? But there is a Toyota Kentucky Camry plant in the US that produces 550,000 cars per year. Brings it down to 15 minutes, not 90. That's why the 1/6. So that is why you're under a gold standard, your Camry or any motor car that you want to buy will be less in the years to come because of high productivity. Lynette, what's your thoughts on what I just said?
Well, actually, when I think about what you just said, what was going through my head was that a $40,000 car is not so much that the car is worth that much more, but that the dollar is worth that much less. Yes. And that's really another way of saying exactly what you said. And if you look at Venezuela in, 2013, 14, 15, they had like the best producing stock market in the world. And they were going through hyperinflation, right? So it isn't that the value of Apple is $1 trillion or $3 trillion. It's that, to your point, yes, they have been flooded with free money, cheap money. In fact, I just did a thing on it where I looked at the M2 supply as compared to how long it took the S&P 500 to go up 1,000 points, starting in like 2000 or 99 to almost to 2014. That's how long it took to go from the first 1,000 to the second 1,000. But then when you overlay the money supply, you can see so clearly. I mean, it's just right there, right? that free money it's devalued the currency. I mean, think about what you could buy. Average wage $9,500 in 1971. Family of four could live on that with one wage earner.
Yeah.
Today, average wage at $58,000. You need two wage earners. You're paycheck to paycheck, and they stimulate you under 150 grand a year.
Yeah.
So it's not, to your point, really, it's not that the car is worth that much. It's that the currency with intention is worth that much less.
Exactly. And that's the reason why those trillion-dollar companies have got this. You print these things at a mile an hour, and that's why you have trillion-dollar companies. And that's why stock markets go up by X amount, because they just print the money.
People need to keep in mind, because, they open up their retirement plan and they go, look, we're okay because the market is okay. But if all you can do is convert it into this and you can't buy anything with it, like the Zimbabwe dollar or the Venezuela dollar, and certainly the US dollar buys a whole lot less at any currency anywhere in the world, it's just prestidigitation, right? It's just magic. And it's all about hiding the truth from you.
Yeah.
Yes, and the magic of printing money. Yes.
Yeah, I know when I was a very young man, this was the biggest denomination in Australian currency at the time.
$50.
Yep. And I remember when these first came out, and I couldn't wait because I had no understanding of how the economy worked in those days and how the excessive printing of currency led to inflation and all of that. I didn't understand it. All I could see was, and this is what most Australians the same mistake they would make. Look at a $100 bill, and that represents value to them.
Yeah.
I carried one of these around in my pocket for a very long period of time. I was just absorbed by it all. But the point is, when you look at it, they're both about the same size. They're both the same material. They're just a different colour. And one's got 100 on it, one's got 50 in you. It's just a massive element of trust that you have in your government that gives that value.
Yeah.
That's all there is to it. It's a trust factor. And what a joke in real terms.
And we trust the government that goes into deficit on a very regular basis. In Australia, it might be different from the US, but I know our overall deficits just keep on rising. And we have this trust that they will fix up all the problems of the world. Well, it's not going to happen.
Make the point that it costs the same amount to print that 50
Exactly.
as it does to print that 100.
Exactly.
And when I was young, although I think we're about the same age, in the US, we had $10,000 bills, $5,000 bills, $500 bills, $1,000 bills. Because I remember one time, it was probably 13, 14, something like that. And somebody came to the house to give my father some money, and it was 12 $1,000 bills.
Right.
Now, I had just gotten out of the shower. He hands me these 12 $1,000 bills. I was too afraid to put them down. That was a tremendous amount of money. So I just went and sat on the family room sofa, clutching these 12 $1,000 bills in my hands until my father got home, and I couldn't wait to give it to him. But in the US, what they did was they took them out of circulation. They didn't actually denominate them, right? They didn't say they were illegal. They're no longer money. But when they got deposited in the bank, they did not go back out of the bank. So today, the largest bill that we have in the US is 100, right? But used to be when I would go to the grocery store, I could go to the grocery store with $20 when my babies were little, and they're 42 now. But I could go to the grocery store with $20 and buy food for us and have a shopping cart full of food.
Yep.
Today, you go to $100 and what do you get? 2 bags? 2 little bags, little teeny weeny bags of food. Don't buy meat. Forget that. Don't buy fish.
Yeah. And you have these economists who love their fiat currency, they tell the story of, you've got to get in the modern era. You don't want your pockets full of coins and heaviness and whatever. And I think, well, I don't know about that, but one gold coin buys a lot. No, you have a couple of those in your pocket and you can't feel the weight all that much, and it buys a lot more than all those dollar notes out there. Yeah. So, yeah.
You know, in that interview with Tucker Carlson, I thought, with Vladimir Putin, I thought one of his comments was quite interesting. And he said, I don't know why, pretty much. He said, I don't know why America is wanting war, and that's the way it appears. He said, they have enough problems at home. He said, surely they've got better things to do than go to war. They have immigration problems, they have inflation problems, they've got their currency is losing ground all around the world. And he said they have just so many issues. Why would they take on another one? And you think to yourself, I couldn't help but think about, say, the Roman Empire, the fall of the Roman Empire, the Egyptian Empire. You know, at the end of the day, if everything else fails, you go to war, because there's your excuse for the failure of your economy. And it's an excuse for the failure and the mismanagement of your economy. And it just made so much sense at the time. Yeah. The conversation could have ended there. I thought it's enough at that point. Yeah.
You know, I mean, I've studied currency life cycles since 1987. And there's lots and lots of currencies that no longer exist. And when you look at the path that they all took, they're all the same patterns. And that's really the beautiful part. I mean, war is one of the things that happens 100% of the time when currency regime shifts happen. But understanding what these patterns are tells you where we are in the trend cycle. I mean, you're never going to get to the day. It's not that. But where are we in the trend cycle? And what is the next most likely outcome? Therefore, how can you get into position to not just sustain your standard of living, but goodness gracious, actually benefit from that shift? Because wealth never disappears. It just shifts location. So why not have that wealth shift your way?
Yeah,
Why
exactly.
does it always shift to the elites? Why would you do that?
Yeah, no, that makes enormous sense. It always makes enormous sense when you speak with Lynette, which is why I'd just at this point like to bring up a gentleman by the name of Charlie Tremendous Jones. We always do, and I have never forgotten this man, but he always used to say, in 10 years' time, you'll be in exactly the same position you're in right now, apart from two things: people you meet and the books you read. And today, we've had the opportunity of speaking with Lynette. It's a great honour, and so many people would have benefited from listening and absorbing the information that Lynette shared. So, Lynette, if the viewing audience, in particular the United States of America, would like to make contact with you, how would they do that? Just so they can further their knowledge over and above where they've been today. What can they do? How do they contact you?
I recently started a new YouTube channel, so Lynette Zang. So you can go to YouTube and put in Lynette Zang. But also they can contact us at hello@LynetteZang.com. And we're evolving. I mean, so let me tell you what, I am so excited. I told you earlier, I don't know if I told you on camera or not, but I've said this a lot on camera anyway. When I went out to Australia with you guys last summer, just 6 months ago or so, it changed my life, because what I realized is that my real job on this planet, as well as Sound Money, is building a global community and building community, period.
Yeah.
Because I know we're at the end of this currency's life cycle. So we need to work on a local community where you know your growers, you know your farmers, you can get the things that you need to survive, especially if you have silver. But you have to come together in a local community, because we are fast running out of time. I've had the luxury of time. I started on this endeavor in 2010. We don't have that luxury anymore.
Mhm.
But we also need globally to come together because there are more of us than there are of the elites. And we vote with our wallets. So if you keep your money in this kind of stuff, that's your vote. If you put your money in your fiat money in real money, gold, real money, silver, physical, that you hold in your possession, that's your vote. That's my vote for sure. And I'm very excited to come back out because that's what I realized when I was with you, is that this is what I really need to talk about. And I've had people say, well, Lynette, you can't sell gold and silver in Australia. Why would you go to Australia? And this was my response, and it is my response, because we're all part of the community. And together, I believe that we can make a positive difference.
Yeah.
So I went to Australia to build community, and I'm getting chills. And I got the greatest gift when I threw out all my normal, dog and pony stuff and just talked about community. So I'm very appreciative to what you've done for me so far. I'm happy to always come on your show and help you in any way possible, because this is all about community.
Absolutely. We're with you all the way.
Yeah, I mean, I think the viewing audience can see Lynette is a very passionate lady.
Right.
Yeah, and that just comes across so well, doesn't it?
Yeah. No, absolutely.
So the benefit, of course, in connecting with Lynette is massive. It'll just make you a better person.
Yes. And for our Australian audiences, when Lynette and Alasdair and Bill Holter are here in November, rush to get those tickets when they become available. But we'll be letting our clients know, or everybody know, the exact dates in November within a couple of weeks.
You invite me, I'm there always. Just say when.
Thank you so much, Lynette. It's been an absolute pleasure as always. And the next time we interview one, we've got to connect the dots a little earlier than we did this time. It was a big gap in between, but hey, really looking forward to our next discussion, and in particular when you come back to Australia. So love to thank our viewing audience, of course, in the United States and Australia in particular. They're fantastic. They support us beautifully and always have. We really appreciate that. And just like to say for now, stay well, stay focused, all of you, and goodbye for now.
Goodbye for now.